An unconfigured accounting system creates immediate vulnerabilities for any business. Without strict controls, users can edit approved documents and backdate entries, creating compliance errors that take hours to untangle. This is the default setting window in your accounting software. By taking control of the configurations here, we can lock down both the sales and purchase workflows to stop unauthorized changes before they happen. To make these changes, you will need administrator or manager level permissions on your account. Before making adjustments, you should have a firm understanding of your company's existing document cycles, specifically how a quote currently moves to an invoice and how a materials request becomes a bill. These settings automate the enforcement of document rules, preventing common manual entry errors before they are recorded in the general ledger. Step 1 is navigating to the correct control panel. Open your default settings and click on the Sales and Purchase Workflow tab. In the top half of this window, check the primary box labeled Use Workflow for Sales. Activating this rule formally enforces a strict linear pipeline. A quotation must precede a delivery, and a delivery must precede an invoice. Beneath that, check the box marked Don't Allow to Delete Lines. This ensures that once a quote is converted to an invoice, the downstream document is permanently locked, preventing anyone from removing items from the final bill. Right below it is the restriction against inserting additional lines. If your team needs to add late shipping fees or minor adjustments to an invoice without starting over, you can leave this unchecked while keeping the original items locked. Enforcing these exact line item restrictions guarantees a one-to-one match from the client's initial quote to their final bill, eliminating unaccounted changes and preventing revenue leakage. Now, let's mirror those exact controls on the purchasing side. Look down to the Use Workflow for Purchases section. Check this box to enforce a mandatory sequence for buying, moving sequentially from a materials request to a purchase order, to item receipts, and finally the bill. Mark the corresponding subboxes here to prevent users from deleting lines or artificially inflating financial amounts when converting these purchase documents. While strict inventory receiving rules are great for physical goods, applying them to external service providers causes bottlenecks since they don't deliver physical items to a warehouse. To resolve this, check the box to Make Exception for Non-Inventory Suppliers. This exception allows your subcontractors to bypass the strict physical item receipt stage and proceed directly to billing. You maintain tight physical inventory controls without delaying payments for services rendered. Moving toward the bottom of the window, we need to address cross-month accounting discrepancies. Logging a physical item receipt in one month, but dating the corresponding credit purchase in the next creates a gap in your audit trail. To stop this, check the box restricting future month conversions, enforcing the rule in the yellow box. Purchase dates must land in the same month as receipt dates. Finally, use the bottom setting to establish an automated payment queue. Enter a day limit, like 30 days. The system will automatically filter your pay bill window, hiding any bills that do not match the specific due date criteria. Aligning purchase dates with receipt dates prevents the specific sequence errors that typically complicate monthly reconciliations. With your rules established, click OK at the bottom to finalize and commit the configuration. Your system is now automatically enforcing document accuracy and protecting your purchasing dates on every transaction. To test your work, create a dummy quotation, convert it to an invoice, and try to delete a line item to personally verify that the restrictions are holding. Taking a few minutes to configure these default settings hard codes your workflow rules into the software, resulting in more consistent data entry and faster internal reviews.